What's up, everyone? It's Karthik with MoneyVest, and I am here in Tampa, Florida. This is the first market update that I'm doing out of Florida ever in my life. And the MoneyVest meetup happened over the weekend. It was one of the best meetups we have had in over 3 years. I can tell you that confidently because we had a lot of our older members join us for this meetup. We had almost 20 people. I'm going to show you guys a picture. And it was absolutely incredible. So I sent this out on our Discord, had the best time meeting with everyone during our 2024 annual MoneyVest meetup in Tampa, Florida. Say hello to everybody. We had it in Bella Brava, amazing Italian-American restaurant. You can see everybody with the MoneyVest t-shirt there. So this right here is the actual picture. And amazing group of guys and girls. And we had so many great conversations around personal finance, investing, and trading, and markets, and Neo, Tesla, SoFi, Palantir, Nvidia, like Meta, all stocks you could possibly imagine. We talked about it. And next year we're planning to go, of course, it's an annual thing, right? So we're gonna do one more in 2025 as we do every year. And we're going to be, we're going to do it a little bit more bigger. So we can have more people join, more people come in, more investor gatherings, more networking opportunities, because that's one of the best things about this community that I like is that we're all so like-minded individuals. We think alike, right? And that's what makes this community so unique and so special to me. This is because I want to meet all of you. I want to have fun with all of you. Of course, I went live on YouTube during the meetup. This was after the meetup ended. A few of us went for more drinks and, with an amazing skyline view. So it was absolutely incredible. So here are some more pictures, of course, from that rooftop bar. So we had an absolute blast, having a great time in Tampa Bay, Florida. And today's comment comes from Rosny. He was there at the MoneyVest meetup. He says, they're going to remember this date forever, November 25th, 2024. I officially entered the Six Digits Investor Club. Thanks, Karthik, and everyone in the family. MoneyVest is the best investing community in the whole world. So I really appreciate, all the kind words, all the great messages. And truly, this has been my life's goal, is to help people achieve financial fulfillment, financial freedom. And that's all we're going to be focusing on. So my goal has always been to provide as much value as I can. And we're going to continue to do that with our content here on YouTube, with our website at moneyvest.com, as well as our Discord, as well as our Patreon. I'm going to go hard and heavy in 2025, and we're going to absolutely crush it. We're going to have another phenomenal year in 2025. Even if that means the markets are coming down, that's still going to be opportunities for all of us. So markets on the day today, up. Dow Jones hitting a record high, almost 1% higher, with the S&P 500 up 30 basis points. The NASDAQ was up 27 basis points. The NASDAQ, a little bit of that underperformance coming in from, of course, the two big names, Tesla and Nvidia. So if you come over to our market concentration, and if you take a look at stocks that were selling off aggressively today, are the two big heavy hitters here. Nvidia was down over 4%, 147 billion. Tesla over $48-49 billion. There's a lot of negative catalysts or negative news sort of out there about these two companies. Nvidia, of course, after the earnings, despite reporting some phenomenal numbers that carry forward of that continued selling here coming in for Nvidia. And Tesla, there was some news that it could potentially get excluded from the California EV credits, tax credits that they receive. Of course, a lot of the profitability, a lot of the high revenues that Tesla is doing is because of the excess regulatory credits that they sell to other companies. But of course, it was down a little bit, almost 4%. And there were some other news pieces that came out talking about Tesla dropping over 35% as this post-Trump winning the election rally is not backed by any fundamentals. However, as we know on the channel, we've studied these companies. We've been talking about them for years, that these are longer-term growth cycles, growth plays that are harnessing the entire electric vehicle revolution, as well as the AI technology. And NVIDIA is, of course, at the forefront of driving this entire AI play. So any type of pullbacks, any type of reds, any type of corrections that I see with these stocks, in my personal opinion, are going to be worth buying opportunities. Of course, depends very much on the price and the valuation that you're buying them at, but they're also tradable opportunities. So there's ETFs like NVDL or TSLL that we're looking at wheeling. Look, we're looking to trade the wheel strategy on, selling puts and then selling calls against those shares, because those are a little bit more volatile, B, generate some very nice premiums and cash flows, and C, even if I own those, right, there's no problem me holding on to it for the long term because I believe in the underlying. The underlying, of course, are these two stocks, these two companies. And of course, there's other stocks as well. So stocks that were pushing higher. Amazon back up over 2.2% today, pushing up $46 billion. Apple also pushing up over 45. Google was up over 35 billion. Meta was up 15 billion. So all in all, the S&P 500 did go up by 159, almost $160 billion. And because of that, the Money Invest Index is now back above 3.9, where we're kind of closing in on 4. So you can see the chart over here. This has already been deployed on the MoneyVest platform. By the way, if you want to get access to everything, all the Discord alerts, all the members only videos, as well as all the updates, alerts, options portfolio updates, everything's going to be with the link down below. There is a 16% annual discount. So this right here, you can pay annually and save 2 months. You can get 2 free months. And there's a couple more spots left if you want to join for November 2024, of course. And you can also be a part of our annual meetups that we're going to have in the future. So every year we do this MoneyVest meetup that I mentioned, and you can be a part of that. So link's going to be down below if you want to join. Of course, get access to all the trade alerts, the MoneyVest website, of course, and you can keep track of the MoneyVest index as well. So 3.9 puts us back in that optimistic zone. We've been kind of in the optimistic zone for a really long time. But if you get up to greed, then that, of course, is going to be a sign for myself to be a little bit more cautious. I'm going to take a step back from the market. I'm going to really be selling calls in that market environment, because that in itself tells me that markets are very, very optimistic. And another really important thing that I wanted to show everyone today is the fact that we are hitting a price to earnings multiple, 4th highest PE multiple in over 124 years. So that is a long time, and S&P 500 certainly trading at a PE multiple which is well in the 25, so like mid 20s, which is considered as an expensive market. It is a market. This is an S&P 500. This is the market right now, which technically is overbought a little bit depending on the time frame that you look at. Fundamentally is trading at a valuation which is very, very expensive. And you've got the MoneyVest index trading at 3.9, almost 4, with the volatility. If you come over to the VIX, down another 4% today, coming back down to like mid 14s. We're going to be putting up the volatility percentiles very, very soon on our platform, which is going to help you also understand what percentile is the VIX really in right now. We've got it on our website. We're going to deploy it on our website, but right now we've got it on one of our spreadsheets, which you can also see. So if you come over to the VIX summary, it's going to show you the 14.6 number here puts us on the 30th percentile. So we're at 29.5. And over here, you can see the total observations, the number of times we've spent above 20, above 50, above 60, below 10, below 5, all those different numbers. And you can see that below 20, we have spent 61% of the times. And these data points kind of correlate really well to some of the other ones that we look at. Meaning, in the last 200 years, S&P 500 has had 75% of those 200 years, which is about 150 years, positive. It's been positive for 75% of the times. And that means volatility has been relatively low. And that is why the 61% of the times VIX has spent below 20, because the markets have been trending upwards for over 200 years. Now, every so often, as I'm sure you already know if you've been watching this channel for a long time, we're going to get those volatility spikes. We're going to get those spikes in the VIX, which is when the buying opportunities come in. That's when we, as a community, that's when I personally start deploying capital into the market because that's when I believe the risk reward is the best, and that's what we have to wait for. But right now, I can tell you from experience, and I can tell you from just the data that I'm looking at, this is a market trading at an expensive valuation with the MoneyVest index trading near greed, right? So as we cross over 4, it's going to be a greedy market. So you want to be very, very careful and very selective in what stocks you actually choose to buy or sell. Now, a special shout out to IWM holders. Small caps have been doing really well, and you can see that small caps, my position's up over 18%, a little bit over 5,000, and I will continue to kind of build this position because I do believe that small caps have a little bit more upside compared to the larger cap counterparts. And I'll show you some of the performance of the larger cap as well. And IWM wasn't really a play for me prior to 2024. So just this year, I mean, it's performed really well. So if you come over to the IWM chart over here, you'll notice year to date, it is actually up over 21.5%. This is, believe it or not, a much better performance relative to a lot of large cap stocks. If you come over to Max 7, Microsoft is up 12%. Google is up 21.3%. So IWM small caps have actually performed better than Google and Microsoft this year. Of course, if this performance continues, I personally believe that it can actually pass Apple and even Amazon eventually on the year-to-date performance, of course, depending on how much upside they really have. But this is just showing you the Magnificent Seven performance. And of course, NVIDIA is absolutely crushing it, 176%, followed by Netflix, which has recently done really well, especially after the Tyson and Paul fight. And then we've got, Meta here up 60%. Tesla's finally up 35% year to date. And most of that has come after Trump winning the election. So this has been a post-election rally. So we'll see how much of those gains Tesla can hold up rest of the year. Now, I also wanted to go over my year-to-date performance just to kind of give you guys a little bit of an update. We're kind of closing in on the entire year, so we've got about 5 more weeks left for the markets and year-to-date performance on my 2 long-term portfolios. This one's up 58%. This is calculated by Fidelity, so this is not accounting for any deposits or anything. It's just strictly the gain on the actual portfolio, right? So 58.7, almost double, actually a little bit more than double the S&P 500 in one of the long-term portfolios, and the second one is up 29%. The reason why this is a little bit more closer tagging the S&P 500 is because I've got VUG in this portfolio. So that's why I like VUG so much, is because I get that slightly additional outperformance relative to the S&P 500, right? A couple extra percentage points, that really adds up over time, right? And if I can get another couple percentage points from individual stocks, then you're really looking at a 5 to 7 percentage points outperformance on the market. And the options portfolio is also up over 32% year to date. So all 3 portfolios doing pretty well, and I hope everybody watching this channel, everybody part of this community, is also absolutely crushing it in the markets in 2024, and your guys' portfolio also looks very, very similar. So coming over to the Money US Index again, we're moving back up, so I'd be very careful here as we close in on 4. The higher we go, the more cautious we need to be. And then finally coming over to the market, we are going to be keeping a close eye, of course, on volatility, because that's our bread and butter, right? If the VIX is high, it's time to buy. That was literally in our t-shirts that I gave out, earlier during our meetup. So I don't know if you guys can see that, but let me see if I can zoom in on someone. You can probably see it somewhere over here. We got when let the price come to you, and when the VIX is high, it's time to buy. We literally put that on the t-shirt for a reason, because this is, a very, very, it's like a quote, it's like a motto, right, that we have on the channel. So we're super excited about that. But yes, coming back over to the market volatility, if it does spike, that's going to be an opportunity for us to deploy more capital. And then coming over to the market breadth, this essentially spiked quite a bit. This is going to update like tomorrow. I don't think this is live, because this does update at the end of the day. So this will update very soon. But take a look at this spike here. Over 81% of stocks are now trading back above their 20 moving average. And if you take a look at where we were just 5 days ago, November 20th, we were at 51%. So we've had an additional 30% of stocks trading back above their 20-day moving averages, and that's what's really helped the Dow Jones. It hasn't helped the S&P or NASDAQ as much. It's really helped the Dow Jones go up to all-time highs, and that's where we're seeing a lot of outperformance in the Dow on the day today. However, the NASDAQ still is the leader if you take a look at the entire year. So if you come back and let's just go over to the year-to-date performance here, you'll notice that the S&P 500 is actually up year-to-date 26%, the NASDAQ's 28%, and the Dow is up 19%. So yes, NASDAQ is still leading this market higher, but the Dow has slowly and steadily been creeping up on those gains, and it's actually hitting a new all-time high. The percentage of stocks trading above their 200 SMA hasn't really moved much, right? We're still at 75 to 80%. And that's one of the reasons the Money US Index has actually moved up quite a bit recently, is because getting closer to greed. And that 4, because one of the variables that we do use is market breadth, and that is percentage of stocks trading above or below their moving averages. And now you can see that a big spike really pushes the Money US Index higher as volatility also comes down. So keep a close eye on that. This is both a good and a bad thing, because yes, market breadth is improving. We've got more stocks participating in this rally higher, but that also leads to those short-term pullbacks, those short-term dips that are sooner or later are going to happen. We're always going to see them in the markets. Coming over to crude oil, we're seeing a little bit of a pullback right at that resistance at 70, 71 bucks a barrel. Very, very normal. Support level is going to stay put at $66 per barrel here. And then coming over to the 10-year treasuries, that did drop quite a bit. We saw over a 2.8, almost 3% correction here on Monday, November 25th. And we're now trading at under 4.3%. So a little bit of a lower high and lower low formation, as we have discussed in our previous updates. Now, coming over to the markets, starting with S&P 500 here, you can see that we briefly hit a new all-time high. However, a bit of a doji candle. So there's a lot of indecision for the markets here, considering that we are back at all-time highs, hitting that resistance at 6K, and support level is going to sit at 5,800. So I really want to make sure that everyone is careful here at these levels. We're back at all-time highs. Money Invest Index is coming up to 4. Volatility is back in the 30th percentile, really, really low. And you've got market breadth that's pushing up, and the valuation, which is now at the 4th highest level in over 124 years. So you got a lot of reasons to be cautious, okay? And that's one of the things that, again, we were kind of hitting home over the weekend on our Money Invest meetup, is that fundamentally, when I look at the long term, I'm very optimistic. As an investor, even as a person, like I'm always looking for the brighter and better future. And I am very optimistic about the long term, but I also want to be realistic, right? I don't want to tell you that, yeah, the stocks are always going to go up and there's just never going to be a pullback, or there's just never going to be a correction or a red day, because then I'd be lying to myself, I'd be lying to you, right? Realistically, I understand that stocks don't go up in a straight line up. They go up, they come down, they go up, they come down. And that's what progress looks like, right? Not every day is going to be green. Not every day is going to be perfect. So I'm here to tell you the best risk reward setups and the best zones where I find the risk rewards to be. And again, the support, resistance, and all that kind of plays a role. So right now, like I said, we're in a market which is starting to get hotter and hotter. Being very cautious and being very careful personally here. And support level is going to be 58, 5,900, down to as low as 57.65. Next up, we've got the NASDAQ here, also slowly and steadily kind of creeping up. However, we did have a green day, but a red candle. That says a lot, right, about the price action, about the strength of this market that we're seeing. And resistance is going to be at 19.3, support level 18.6. We're seeing a little bit of consolidation here. We were expecting this breakdown from this rising wedge. We got that briefly, but then post-election, we got 3 very strong days to push us to new all-time highs. Got a little bit of a pullback here, and we're now starting to slowly and steadily kind of creep back up to that all-time high again. So keep a close eye at 19.3, support at 18.6 right now. Coming over to Apple here, and Apple also pushing up very nicely, up over 1.3%. So nice little rally in Apple here, a lot of market cap coming in, and the next resistance, or that area of supply, is going to stay up at a 236. So that's going to be that level to keep in mind. Support level at $214, $215, with a lot of consolidation for Apple. Coming over to Amazon, also there's a huge support area of demand here for Amazon. Resistance is going to be at 215 to 16 for Amazon here. So again, we're seeing a lot of consolidation sideways. Coming down to that support, we understood that there was demand there. Buyers were going to step in, and that's exactly what happened. We've got some buyers stepping in now in the low 200s for Amazon. Coming over to Tesla, and Tesla here with a big dump. A massive red candle. I mean, it was doing really well. I think at one point pre-market it was up like 2%, 3%. 361, 362 was pretty high levels. But then, of course, absolutely getting dumped here. There's a lot of profit taking, in my opinion. Support level is going to stay put right here inside this green rectangle, inside the low 300s. That's the level that I'm watching very carefully. But Tesla's next resistance and target obviously is going to be in the 380s, right? So 381 to as much as 415. That's pretty much the all-time high for Tesla. And I do believe, again, nobody can make predictions, but I do believe that Tesla may get up to all-time highs prior to the year getting done, right? So, and that's also going to be as we get closer to Trump entering the White House on January 20th, the inauguration, and then as we get more news on, let's say, tax credits and EV subsidies and whatnot. I think that's every little catalyst, like political catalyst, is going to be a bit of a sprinkle for Tesla. It's going to be a small little catalyst to push, right? To push to that level. And in my opinion, I think momentum strong, sentiment strong, and any type of pullback or correction or red days could get bought up here fairly soon. So we'll see what happens. Keep a close eye on supporting the low 300s here. Resistance at 380, $415. That's pretty much the all-time high. Now, NVIDIA absolutely getting dumped 3 days in a row. Resistance, of course, at an all-time high, 149, 150. Support level 133. If you do get a little bit of a breakdown, which I wouldn't be surprised if we do, next support really is going to be down in the 110s. I've got calls at 125 that are getting very, very close to being back out of the money. Right now, of course, they're deep in the money by over $11. But we'll see. We'll see what happens in the coming weeks for NVIDIA. We don't have a lot of catalysts. Earnings are behind us. We really only have macroeconomic catalysts with inflation and unemployment. that's coming about. Support level is going to stay put at 133 down to as low as inside this green rectangle, this area of demand in the 110s. Coming over to advanced micro devices. Now, this is one stock that I'm starting to really like. I mentioned this in the Friday's update as well. It's come down to a very good support, you guys. Trading at an area of demand here, starting to move back up. And we also had a huge influx from the L3 banker oscillator. Some whales are stepping in. And look at the last time that this actually happened over here. Look at exactly the last time this happened on AMD, August 12th, right? So this right here is when we had some L3 banker oscillator kind of triggering some whales starting to buy. Look what happened. We had a 21% rally for advanced micro devices. Not saying that this is going to be the same exact time as last time, but we certainly have a lot of potential here. So resistance and initial target is going to be 150 up to, I would say, as much as 19-20% again. That's going to be 165, 166. Technically, a lot of things look really good for advanced micro devices. Going over to PayPal here, and PayPal and Visa very quickly. So PayPal here also tagging our resistance at $88, $89. Seeing a little bit of a doji candle coming off. A lot of indecision there. Support level is going to stay put at $81. Very quickly going over to Visa, hitting a new all-time high. Starting to see a little bit of breakout above this. And we're going to go ahead and turn this level back into a support for Visa here. Another level is going to be low 300s. $305, $306 is going to be Visa. Coming over to Enphase, and Enphase has been having a blast. Look at that, up over 8.5%, back up to almost $72. And we were at a support. So we had, again, L3 banker oscillator kickoff. A little bit of a buy signal there for Enphase. Very strong support there, 58, and we're now starting to see that rounding pattern. We're just pushing back up. Now, the question is that are we going to see a breakout above $73, $74, or are we going to see some rejection there? That's the real question. RSI is trending upwards, which is good. MACD crossover the signal line, so breakout possibility is there. But what's going to drive that breakout? Volume. And also interest rates. You'll notice that the reason why we actually did see a very nice move in the last 2 to 3 days is because the exact opposite is the US 10-year Treasury. So you can see the last 2-3 days it's been coming off, right? So interest rates going down is actually beneficial to Enphase Energy because of financing and because of the fact that US households and consumers can finance their product, because installing solar panels is not cheap. Roughly costs $15,000, $20,000. So it's a big decision. So interest rates obviously play a very big role for Enphase. So keep it close at $73, $74. And then coming over to Costco, we're seeing a little bit of a pullback. Support level 960s, down to 919, 920s for Costco. And we're seeing a nice, very overbought condition here on the MACD RSI. So I'd be careful with this stock as well. Going over to Meta and, of course, Microsoft, Google. Meta here consolidating sideways, so not really moving much. Resistance is going to stay put at 600, support level down at 540. Going over to Netflix, finally getting dumped after a lot of massive rallies. And I mentioned this in my previous updates. Be very careful, you guys. Any day now, we can expect to see a bit of a pullback, correction, dip, whatever you want to call it. RSI is coming off, MACD is coming off. And again, the price was just below the top, rallying just hard over the last 2 to 3 weeks here. Now coming over to Google and Microsoft finally, and Google here getting a bit of a bounce from that support. That's good to see. That was the area of demand that we talked about on the channel. And resistance is going to step at $175 up to $183. And Microsoft here finally, a little bit of consolidation. It's actually underperforming even the Dow Jones this year. Microsoft really hasn't had the best of the years, but it's still up, right? It's still up as it should be, as it's supposed to be. A lot of consolidation sideways, huge target, huge resistance here in the 430s and 440s, and a lot of support here inside this green rectangle in the low 400s. So there you have it, everyone. That's the entire market update. Hope you all enjoyed it for the first time from Tampa, Florida. Happy investing. Hope to see you all next year in 2025. It's going to be amazing. We're going to be doing it bigger and better every year. We're going to be improving our conferences, our MoneyVest meetups, because they're just so much fun. They're just so much fun. You get to talk to so many people, and you get to put a face to the name. That's the most important thing. Is like oftentimes I'm talking to people on Discord, I just don't know who I'm talking to, and I really want to meet that person. And now I see the community completely differently, because now I know so much about them, and that's what makes it so unique and so personable. So thank you so much for being here. I appreciate you all. Links are going to be down below if you want to join, of course, be a part of our MoneyVest community, our family. I should really start calling it our MoneyVest family. And as always, happy investing. I'll see you all in the next video.